Hi, Bill. Thank you for joining our interview today, and welcome to Hong Kong.
Thank you. My pleasure.
Yeah, so my first question is about your result. You have a very strong result in 2024.
Yeah.
And can you tell us what's the growth engine, and also what will be the future? Do you think that growth momentum can continue?
We did have strong results. Thank you for asking. The results really came in all of the key strategic areas that we had identified. So we've said for some time now that the core business proposition for our bank is helping our clients with everything that's cross-border, and whether those are corporate clients or individuals, and then with a particular focus on serving affluent customers. And of course, that's a key part of what we do here in Hong Kong. So we had really very good, strong growth in all of our cross-border business, which is now about 70% of our total corporate bank business, and very strong growth in our affluent client business. Within that cross-border business, probably the biggest driver was our financial markets business. And we know there was a lot of volatility last year around the politics and geopolitics of the world. And we were very well placed for that, especially in China, where we know that China is going through its own very substantial transition, so lots of movement in the currency. We have the privileged position of being a leading dealer in the RMB market, both onshore and offshore, as well as a leading cross-border payments bank and a cross-border investing bank, so the Bond Connect and Stock Connect schemes, things like that. So all those things contributed to our good, strong growth last year. We accompanied that by a good expense discipline, good capital discipline, so continuing to increase the return on our capital, and getting to an overall bottom line result that we're quite happy with. Going forward, all those growth drivers, thankfully, are still in place. So we see the affluent population in Asia continuing to grow. That's obviously in Hong Kong and China, but also in India, ASEAN, and increasingly in the Middle East and Africa, where we're seeing both the demographics and just the maturation of the economy leading to a greater pool of affluent people who need some help. And thankfully, our proposition, I think, is very good. So we seem to be a favored counterparty for our clients, perhaps in part because we are open architecture, which means that we don't manufacture our own product. We don't have an asset manager, and we don't have an insurance company in our group, which means we can pick the best of the third parties and deliver that to our clients. And I think clients are really appreciating that.
Well, you have mentioned you will put down 1.5 billion to promote your affluent wealth management business, and you also set a very ambitious target to get a net new money of 200 billion in the next 5 years. Can you tell us why you are so confident to set such an ambitious target, and what will you do to achieve it?
Well, we think the underlying market is already very supportive. So the market is growing quite quickly as wealth accumulates, as we just discussed. The 1.5 billion for us will be a combination of hiring relationship managers. So we have proven to be a very attractive destination for relationship managers. We've got the full range of products and services. We've got a good brand, and we have good underlying technology, which our clients appreciate. And as I mentioned before, we are open architecture. So our RMs can sell what's best for the clients always, rather than what is produced in-house. So we'll invest heavily in RMs. We have been for some time. We'll continue to. But we're also investing heavily in technology. So in particular, artificial intelligence-driven advisors. So for starters, we want to make sure that our RMs have access to the best advice that we can provide them, so that they can then customize that for their customers. So whether it's technology in terms of digital interface with clients, portfolio management techniques, reporting tools, or AI-based applications, that'll be the other part of our 1.5 billion.
And how about the 200 billion target?
The 200 billion is consistent with the amount of net new money that we've been originating for the past couple of years. And we think that we should be able to increase our market share in this market. We have a superior proposition in many regards, and we're investing heavily in that proposition. So if we're starting in a good place and we're investing heavily, we should be able to capture a slightly larger than proportionate share of the market, and that would get us to the 200 billion.
So you have a big expansion plan. So I want to know how will this money come to Hong Kong? Will you plan to expanding more in Hong Kong, and what is Hong Kong's role to your bank? Because I know Hong Kong is already your biggest market, right?
Hong Kong is extremely important for Standard Chartered, always has been, and will continue to be. Yeah, we also have a very big business, onshore business in China. So many of in fact, the majority of the clients Chinese clients that work with us in Hong Kong or Singapore or Dubai or someplace else start with a relationship in onshore. It's the same with our global Indian population. They very frequently start with an account at Standard Chartered onshore in India or onshore in Indonesia or Malaysia, and then work with us on their cross-border needs as well. So Hong Kong, of course, is the heart for us. Hong Kong is the primary wealth center for Asia. Singapore is also important to us. Both are growing quite nicely. And we find that different clients, many clients have leave some of their money in both Hong Kong and Singapore. But typically they're leaving their money in different places for different reasons. And Hong Kong is an extremely attractive place. Rule of law is good. The culture is very familiar, certainly to mainland Chinese clients. Hong Kong wealth is accumulating. Of course, we're aware that it's been a little bit difficult in Hong Kong the past couple of years post-COVID, but I'm very bullish on Hong Kong and the opportunities for Hong Kong to continue to grow quite nicely.
Well, I want you to talk more about the future banking because we know AI is everywhere, right? So how do you think AI will change the shape of the future banking? And also, how do you think about the cryptocurrency and other digital assets?
I mean, first, when we talk about the future of banking, it's hard to separate that from regulation, banking regulation. And we know over the past, really since the global financial crisis, that banks have become more and more regulated, required to carry more and more capital. And we've gotten to the point now where banks, in many cases, are not the cheapest lender certainly to global corporations. This is a little bit more a feature in the West, so the US and Europe, than it has been in Asia so far. But you see that the bulk of lending in the US now is not coming from banks, it's coming from non-banks. I think that trend will begin to pick up pace in Europe, and then eventually that will probably happen in Asia as well. Which means that banks have to find different ways to add value. And arranging these financings so that the loans can be placed into the private credit funds is one way to do that. But banks more broadly have to come up with the broad range of service propositions. So for us, that involves a lot of interest rate and currency risk management, cash management, custody for stocks and bonds, and raising capital from different sources. In some cases, in the emerging markets, it's raising capital on a blended basis between public sector entities like the AIIB or Asia or Africa Development Bank, and doing that in a way that's technologically very advanced, and that's where AI comes in. The opportunities for us to use AI to improve the customer experience, we're just beginning to scratch the surface. So we had our team together in Hong Kong all of last week, and a big chunk of what we talked about with our international advisors and then with our senior management team itself was how we prioritize the AI use cases in our bank, in banking generally. And I think you'll see more and more AI used for fraud detection and fraud prevention, anti-money-laundering, screening, and things like that. But you'll also find AI being used to inform our relationship managers how they can best deliver a set of products and services to their clients. And many, we have over 200 use cases that we're developing right now. And we're doing that at very, very rapid pace.
So I think another topic in the city is about the ESG. I think you are also a bank very keen on sustainable financing. Can you share more with our readers?
We set out like 6 or 7 years ago that, of course, we recognize that the battle against carbon emissions or greenhouse gas emissions and climate change, it's real and it's live. And unfortunately, we're seeing examples every day of what rising temperatures are doing to our planet. It's not too late to fix this, although we're behind at the moment. But what we said 7 years ago is that we will help our clients to transition to a low carbon or zero carbon business model. And many of them didn't know how to do that. Either technologically, we can help a bit with that. Mostly they have to figure that out themselves. But financially, we can help a lot because this transition is expensive. So we said our strategy is do the right thing. But very importantly, we said we've got to make money doing it because if it's not good for business, then we won't be able to sustain it. So at the same time as we embarked on a whole range of programs to make it easier for our customers to transition to a zero carbon economy, we said we're going to set up a dedicated business to finance that transition, and we're going to make money doing that. So in fact, we set a specific target to make $1 billion of income by 2026. We actually just about made the $1 billion of income in 2025. Why? Because we have a very distinct proposition in project finance. I think because we're thought leaders in the space and because our policies are very advanced, clients tend to come to us and say, okay, we know that this bank, when they are determined to do something, they can get it right. So I think this will continue to be a very, very important business for our bank and for our clients.
So thank you very much for joining our video interview today.
Thank you.
Thank you.
Pleasure being here.